Yo, 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 it's your boy, the insurance junkie, your fiduciary fella, the all-star advisor Alonzo Hall, and I've returned today with another ADH wealth solution. Today, we'll begin to discuss fulfilling all of your financial needs. To contribute to channel growth, the links are in the description. To schedule an appointment of your own, or to purchase life insurance directly up to $1 million with no medical exam and an instant decision, my information is in the description. Lastly, make sure you hit that like, drop a comment, subscribe, and hit that notification bell so you're made aware every time I release new content. And as always, share, share, share. And now, here's our next feature.
Salute, folks. It's your boy, the insurance junkie, your fiduciary fella, the all-star advisor Alonzo Hall, and I've returned today to whap and tap on your head with another ADH wealth solution. Today, I want to talk about something simple, term and whole life insurance, because it gets deep. But before I go in, ladies and gentlemen, make sure that you hit the like, drop a comment, subscribe, and hit that notification bell so you're made aware every time I release new content. And as always, share, share, share. Lastly, to contribute to channel growth or to schedule a one-on-one appointment with a licensed financial professional, the links are in the description. So, what is term and whole life, and what's the difference? It's a simple question to answer on the base level. But as we go a little more down the rabbit hole, you learn that each tool is in the shed for a different purpose. So, when it comes to term, it's for a specific period of time, usually 10, 20, or 30 years, and then it's done. Its only purpose is to provide money when the insured person dies, as long as it's inside of the term. If it's after the term, you're out of luck. Now, it's a widespread belief that term insurance is cheaper. And although it may be less expensive dollar-wise, it may not be cheaper over time, or the term, aka 20 plus years. But let's look at the types of term insurance there are. So first you have renewable term, where you can renew the policy at the end of your term without taking on more underwriting requirements, but it's substantially more for the same amount of coverage. Then there's convertible term, which allows you to exchange the term policy in for a permanent or a whole life policy. So then next is level or decreasing term. In level, everything stays the same during the duration of the term period, while decreasing term means that your face amount or your death benefit grows smaller and smaller every year, even though you pay the same amount for premiums as when you started the policy. So moving on, we now have adjustable premium term, where the premiums can actually change while you're covered. Now, this isn't something that life insurance companies traditionally do, okay? And that's gonna be it, but that's the basic rundown of term. So now let's move on to permanent, or what most people know as whole life insurance. So you've got traditional whole life, which comes in a variety of manners, starting with non-participating whole life, which is just a level premium and death benefit during your entire life. The advantages of these are usually low cost and fixed price policies. So next is participating whole life, and these types of whole life policies actually pay dividends. So those dividends can be paid out in the form of cash, used to pay your insurance premiums, used to accumulate interest, or used to purchase additional paid up insurance. Now just realize dividends are not guaranteed, just like your stocks. So now we have intermediate premium whole life. It's basically a non-participating whole life, but it allows for adjustable premiums, okay? Now there's also economatic whole life, which gives a basic amount of participating whole life, but it also gives a supplemental coverage paid for by the dividends. Now, however, because the dividends may not be enough to pay for the proper amount of paid-up insurance, the supplemental coverage can drop in the future. And then there's limited pay whole life, which is a whole life policy that you only pay for a certain term. For example, 10, 20, or 30 years. But after you're done paying your policy, it remains active. And then there's still the cash value accumulation. There's also single premium whole life, which is a life insurance policy where you pay one time for the whole life policy and it continues to stay active until you cancel it or you die, and it still builds cash value along the way. Then we have the fun stuff, okay, which is interest sensitive whole life. And here you have universal life, which is a bit more than just interest sensitive. It gives you the ability to have a flexible premium and more interest credited to your cash accumulated. There's also excess interest whole life, where if you're not at all interested in the flexibility of a universal life, but you still enjoy the funding of it, this is likely going to be your option. Okay, then there's current assumption whole life, where similar to universal life, there's a mortality and interest credited, but in this case, the premiums are based on a current estimate of a future investment goal. And of course, there's variable whole life insurance. Now, most policies can be bought on a fixed or variable dollar basis. On the variable end, face amount or death benefits and cash values are specified in units, and the value can increase or decrease just like your shares in a security or stock. If your investments do poorly, you may need to add money or risk losing your life insurance policy completely. So there's actually a whole bunch of other variations to these main plans, and I'm going to run those down for you really quick, really fast. So you've got credit life insurance, monthly and ordinary debit insurance, modified life plans, and then you've got the infamous family policy, joint life and survivor insurance, joint life insurance, endowment insurance, juvenile insurance, senior life plans, and finally, pre-needs insurance. Each one is very specific and takes special attention to make sure your situation is taken care of properly. So that's going to be it for today, folks. Make sure that you hit the like, drop a comment, subscribe, and hit that notification bell so that you're made aware every time I release new content. With that being said, wipe ass, work in progress every day, and see success. And remember, ladies and gentlemen, when people challenge you, they don't challenge you to challenge you, but they challenge you to challenge you. Accept the challenge. Salute.
Hey folks, this last video was sponsored by my company, where we help people like you to reach their financial goals. We do this through a simple conversation where we help to identify and then protect your lifestyle, and then we implement a plan. The process starts at about an hour. So, if you want more information or you want to schedule a consult, contact me via the information in the description box, and let's talk and see if we're actually a great fit for each other. Remember, ladies and gentlemen, when people challenge you, they don't challenge you to challenge you, but they challenge you to challenge you. Accept the challenge. Thank you, and enjoy life.